Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So, markets are trading up this morning. There was some good news out of the White House. We had basically Apple getting a sweet deal. They said they would invest another $100 billion into U.S. manufacturing, and essentially they're going to be able to avoid most of the tariffs. Now, Apple yesterday did trade higher on anticipation of this and is again pushing sharply higher today. So we'll take a look at that chart. Where is the trading level? I will reveal it. In addition, lots of earnings, lots of potential semiconductor news on tariffs, and we will get right into the chart. So let's flip over to the S&P futures. I always start with the S&P futures because it gives us a basis for understanding where the stock market is trading in early action. And right now, what we see here, if we look at where we closed yesterday here, folks, and we take a look, we closed yesterday right here on the day. So again, we draw a line right there. You can see the markets are trading up very nicely, although off of their early morning highs. You can see we traded up as high on the futures as 64.27 before pulling back to about 64.10 now. And that's after, by the way, a close at 63.71. So basically what we're looking at is a 40-point gap up on the S&P 500. That is over 0.5%, almost 0.75%. So it is a very nice move to the upside. Next, I love to flip over to that S&P daily chart and take a look. And what we see is we still continue to kind of trade in this range, but today's gap up will be putting it up a little bit higher. Now, the biggest thing here is, does this change the bear flag formation? We won't know until the end of the day. But again, it will be something we watch. Now, in addition, as a technician of the charts, what we need to be aware of is whether or not we come up to this high, retest it, and potentially break it. All right. So again, that's key here. Looking at this chart, we want to watch that epic pivot high from last Thursday, 1 week ago. That was at 64.27. Obviously, if we gap up 40 points today, we'll only be at around 63.80 to 90. But again, if we continue to climb in the coming days, we need to watch this as a technician of the charts to see if it breaks or if it gets rejected. And again, I would expect it to be rejected if we get up there, but anything is possible. And that's why I always say, let the charts tell us. We don't tell the charts. All right, the dollar today is basically flat on the day, continuing to trade within its parallel channel. Again, we basically have a situation here where we know there's resistance up here at around 100 on the DXY. There's support down here at around 95.40. Anything in between could be chop. We just know that there'll be likely a bounce here and a rejection up in this range. So again, there's really nothing to do here on the US dollar, the DXY. We just want to monitor these two levels. And obviously we have to note that we're in a pretty significant downtrend on the US dollar at this point. The 10-year yield continues to look to me like it's forming a bear flag after having a major breakdown below a wedge pattern. And again, you can see the dramatic move there on the back of the non-farm payrolls number. And again, all inside bar action right here, which again, that is forming what we would call an immature bear flag. And remember what I said yesterday, guys. We went over this quite in depth yesterday. I talked about the difference between an immature pattern and a mature pattern. So every pattern has an optimal period when it plays out. And what you see is when you're forming a bear flag, when you just get a couple candles sideways, making that bear flag, or in another case, a bull flag, that's what we would refer to as an immature pattern. In other words, it's not reaching its optimal kind of growth state for the highest probability outcome yet. It's still just forming. In other words, there's still risk that it could deviate from that pattern setup. And ultimately, you want to look for the optimal mature patterns to play versus the immature patterns. Immature patterns are good to take note of, but you don't want to get overly excited about them until they mature. Very, very key, guys, in terms of my analysis that I do on the market. All right, flipping over to Apple. Here's that big move yesterday after hours when we saw, again, some very good commentary from the White House and in terms of what Apple would be doing in terms of tariffs. And that move up dramatically took it to about the 220 level. Now, since then, it's really gone sideways, which is okay because I am eyeing a tradable level here for the intraday action. There's a gap fill at 224. And the 224 level, if we pop up there, that should be a very significant resistance level. And I would expect a rejection there. So again, Apple's trading at 218.72, almost 219. If it continues up into this level, we should see a rejection here. Now, remember, where is Apple in 3 weeks, a month, a year? I have no clue. I'm not going to pretend to know. What I know is that in the short term, if today or tomorrow we hit 224, probabilities would dictate there's a high percentage of a short term pullback on that chart. So, as a day trader, as a swing trader, this is a very good setup pattern for me to keep an eye on. All right, Airbnb reported earnings yesterday after the bell. After initially spiking, it has fallen back down. It's not down a ton, though. Really, again, we look at where it closed yesterday, and we closed on the charts right around 130. So it's down about $8 on the day. Now, if we go to the daily chart, there's a couple levels that I'm eyeing. One is at 115. So you can see we're right now at $122.20. If it falls to 115, there's a gap fill there that should yield a potential day trade bounce. Secondarily, if we were to really see the bottom fall out of Airbnb, there's this upsloping trend line here, and that again would give price major support at $103 per share. APP initially took a massive leg lower, dropping from a close yesterday of around 390 or so, all the way down to 333 before rebounding, and actually is now slightly green following their earnings announcement. Now, being only slightly green, it doesn't give us a lot of volatility. If you look at the chart here, here's where we closed on the daily chart yesterday at around 390. We're trading at 393. On a $300 stock, $3 does not get me out of bed in terms of looking for a shortable level. Now, I will say this. If by chance it rallies up to 418 today, there is a resistance there, and also at 428 resistance. So I would potentially start looking for a short trade on AppLovin APP if it gets up into this 418 to 428 level. At that point, I would expect some serious resistance. Fortinet, huge drop on Fortinet on earnings. We're talking over 20% here. It's going lower in the pre-market, but take a look at what is looming. There's a trend line here that I have on my daily chart. If we zoom out, take a look at this level around 73.50 on Fortinet. Beautiful level here. This is a former major move up high, pulled back, high, pulled back. So basically it hit it 3 times, then took a leg lower, then pushed up, broke out, and then look at how it reestablished this level here. Once it broke out, it tested, retraced to the scene of the crime, retraced to the scene of the crime, and then off it ran. And that to me tells me that this 73.50 should be a very interesting level for a potential intraday bounce, maybe even a multi-day bounce on this one. DoorDash was up significantly. It is starting to come back in. I'm a little sad about this because the significant move up was priming me for a short day trade at the open here with members of the live day trading room. I'll show you why. Daily chart, take a look at what we have here. There's a beautiful parallel channel, and at 284, if we hit that, and by the way, it's still valid during, granted, we're pulling back a little now, but if it pushes back up to 284, that's a beautiful upsloping trend line right there that happens to have a parallel right down here. And that would be a very good shortable level on DoorDash. Now, again, for those of you that are new, remember what I do. If something's getting hammered, I'm looking, where am I going to buy it? i.e. Fortinet, right? FTNT. We talked about 73.50. If something's up massively and into resistance, I'm looking to counter trend trade that and looking for a pullback. Again, shorter term trading here. And that is, again, what we do. We look at the charts, we look at the data, we make short-term assumptions. I love those analysts out there that give the S&P by next year will be at 7,000 or 10,000 or 4,000, whatever it is. They honestly have no clue. All right. The odds of you predicting, a year out is very low. Can you predict out a day or two? Yeah. If you use technical analysis very accurately with a high win rate, you can pinpoint where levels will hit. And you've seen it in these game plans. I'm not always right, but my percentage win rate is definitely 75% or greater. And the key is this, right? When you're projecting out over the course of a year or 5 years or 10 years, how many things will happen during that period that could screw up your model? right? So again, you could have a war, you could have new economic policy. Heck, we could have tariffs, right? I mean, all of these things that can then skew. And even then you get, oh, the tariffs are coming. Oh, this market's going to tank. And what does it do? It goes to new all-time highs. And so my point is that always be aware that when you hear people asking about, oh, well, where do you think this is going to go? Like, I always give my opinion, but I will always say to you that my opinion on long term is going to be less accurate than short term. Short term is much easier because there's less things that can happen in that short amount of time that can cause your model to deviate, your pattern setup, your price, time factors to change. All right, back to the charts we go here, guys. I just wanted to kind of enlighten you on that. This morning, Eli Lilly getting hounded or pounded here on the back of earnings. It wasn't their earnings that were bad. It was that their oral weight loss drug did not have good results. And so again, the stock collapsed here. It did get a pretty significant bounce. If we go to the daily chart here, a couple things to take note of. If I look at the daily chart, there's a level that's now starting to pop out pretty significantly here. And again, I would say somewhere right around the Pierce of 600. It's still a long way away, but there's a gap fill and kind of all of this sideways chop. And if you get down there, you should be looking at some sort of bounce on Eli Lilly. Again, pre-market, you can see it really took a big leg lower, and then it got a bounce back, got as low as around 635 before bouncing back to about 685 here on the day. All right, so again, really, that's all I'm looking at it right now. You could look at this high here around 628, but we kind of kissed that already. That's, again, these two little pivot highs right here. So, again, I'm being a little bit more cautious on Eli Lilly. Now, in response to Eli Lilly, NVO had a big move up to the upside here on the charts, and you can see it has come back in. But the reason why NVO had a big move up is just because, again, trouble with a competitor like Eli Lilly's oral weight loss means there's an opening for Novo Nordisk with their weight loss to maybe take some market share or have some better results. And again, if we look at the NVO chart, I love this chart, guys. In fact, in the dividend trader yesterday, our dividend trader put out NVO as a buy. He bought it up in the dividend trader. And the reason is very simple. If I go to my bigger time frame, look at the pivot low right here and look at what it hit yesterday. And today he unloaded for over 10% gain, literally in less than 24 hours. Now, the dividend trader is part of Smart Money Stocks and ETFs. That Smart Money Stocks and ETFs has literally like 3 or 4 services under it that you all get access to. It's pretty cool. So if you're not a swing trader, you're more of a dividend trader, or if you're a small cap trader, there's small caps in there. It's pretty cool stuff in any case. All right, so great move on Novo Nordisk. Celsius reported earnings today. Great earnings on Celsius, guys. This stock has skyrocketed back north of $50. If we go to the daily chart, where's first resistance going to be? It looks to me like first resistance is going to be right in this vicinity. I would say 55 is a decent level. There could be some good resistance around 55. And then there's a gap fill at 58.75. So once you get up into this range, I would start to look for significant resistance on Celsius for a short-term pullback. Long-term, this could go higher, but short-term, we should see rejection in this range. Again, 55 to basically $58 on Celsius. Datadog reported earnings. Stock's not doing much here. It popped initially, pulled back. It's only up a little bit. Again, anytime a stock is only up a little bit, I'm not really apt to trade it. Maybe first level 157.67, which would be this pivot top right up here. Let's flip over to Bitcoin here real quick, guys, and take a look at Bitcoin. If we zoom in on Bitcoin having a nice little move up, potentially retracing to the scene of the crime here. This is where Bitcoin will have its first big resistance, right? So if we look at this and we understand how this works, right? All along here, this was all support, all along this bottom of this prior bear flag. So what does that mean? Well, when price comes up into it, it's going to be resistance, right? So you're expecting for price to kind of run into resistance. We talked about this yesterday. I said upside would be around the 117,000 level on Bitcoin. And again, we're just getting close to that. But again, watch that level closely. This is going to be a big test for Bitcoin. Next up, let's take a look at gold here. Gold getting a little bit of an uptick today. Nothing crazy. Again, we're still just in the underbelly of this resistance zone here around this 3,415 level. And again, until proven otherwise, this remains as big resistance on gold. And I would still have a slight negative bias for a rollover. Now, one thing to keep an eye on, if the stock market really continues, let's say the stock market makes new all-time highs in the next few days, overall, that would be bearish for gold. You would assume, right? Risk on, people sell gold versus when people are scared, they buy gold. So keep an eye on that. Okay. Next up, let's take a look at silver. Silver pushing up a little bit here. Same thing. You can see pretty much all the risk assets rising there. Silver, Bitcoin, stocks, and so on and so forth, retracing back up. Resistance remains at around 39.50 at this key orange trend line that goes back to 2022. So again, if we get up there, that's going to be resistance. Not to say it can't be broken, but we just have to respect it until it is broken. And then we can start saying, okay, now we go to 40, then we go to 45, maybe even 50. But again, as of now, this could still be an inside bar bearish pattern, downward move, kind of flagpoling, and then the upside move on silver. U.S. oil. Let's take a look at U.S. oil here. Oil did break my key support line yesterday, pausing today, but again, it is below. Granted, it has not confirmed yet a breakdown, so we'll just monitor that. But overall, if it confirms, I still think it's going to $60 a barrel. And again, classic trend line right here, hammered on it all through here, bounced, hammered again, bounced, and finally came down, small bounce, and then break to the downside. Let's watch to see if it confirms. Lastly, natural gas here, guys. Nat gas pushing up just a little bit the last couple days, pausing today. This small bounce, I would expect maybe a little bit more upside, but eventually a rollover and breakdown on natural gas. I'm still eyeing a buy level at $2.63. All right, so listen, we had jobless claims this morning. Jobless claims came out at 226,000. Anything in the 220s is fine. Like literally nothing to see here, folks. Now, we did hear from the non-farm payrolls last week that things were kind of honestly weaker than expected. The revisions, the number, that's telling us something. And this, I want to put this in a context. So when you see weak jobs hiring, that means people, the companies out there, they're stopping their hiring. But we're seeing from jobless claims that they're not firing people yet. And listen, I mean, obviously people are getting fired, but I'm saying not abnormal yet. So the jobs data is definitely, the non-farm payrolls hiring is weakening, but you're not seeing it go into the point where you're seeing more and more firings just yet. What that tells us is that, yes, the labor market has slowed, but it is not falling off a cliff. And I think the market likes that for now. They're kind of brushing that off. I think we're more likely to get a September rate cut at this point. But again, the economy is not falling off a cliff just yet, which is good. Cheap money, but the economy is still hanging in there. That's what the market wants. Now, the question is, on the S&P, can we come up and negate that previous high that was a huge reversal candle? Because that is going to be the telltale signal of what happens. Again, remember, the way I treat it is that wide range reversal candle on the S&P. In fact, let's go back to the chart and take a look. This candle is a top with this parallel until proven otherwise, right? And again, we can all make our gut feelings or our, oh, I really hope it breaks, or this. It doesn't matter. The charts don't care. Charts don't care at all. All they care about is probability, and this is a signal of a reversal until proven otherwise. And this is really an inside bar bearish flag pattern. So keep that in mind. We all want to kind of jump to conclusions, even myself. And I try to just remind myself, stick to the charts. The charts are in charge. All right, guys, as always, verified investing, no BS, just charts and probabilities. Thanks so much for tuning in. I can't wait till tomorrow. We'll see where this market goes today. You guys have a great one. Take care.